Something just happened that hasn't happened since 2007. And it wasn't the Fed raising rates. It wasn't the Fed cutting them either. The Fed did nothing today, and the Dow still crashed 1,100 points. Its worst day in over a year. So how does nothing erase over $1 trillion in an afternoon? Here's the answer nobody's giving you. While everyone stared at the rate decision, the bond market sent a message so loud it shook every market on the planet. The 30-year yield rocketed to a level we haven't seen in 19 years. And the reason why is the part that actually matters. Because an era just quietly ended today, and almost nobody noticed. For years, the Fed held the market's hand, told it what was coming, cushioned every shock. That's over now. The new chairman just took the guardrails off, on purpose. He literally said, "Let the market decide." Well, the market just answered, and it did not whisper. So what does that mean for you? It means more volatility, more shocks, a completely different game. But here's the twist most people are too scared to see. This new chaos might be the single best environment XRP has faced in years. Stop scrolling, because by the end of this video, you'll understand what the bond market just screamed and why it changes everything for XRP holders. Let's go. Real quick, straight from the heart. I'm not a financial advisor, and nothing here is a promise. Anything I say about rates, yields, or price is my opinion, never a guarantee. I make these videos because I believe in this space, and I believe in you. So do your own research, protect your family first, and let's stay patient together. Cool? Let's get into it. Let me give you the facts clean, because the panic headlines are burying the real story. Today, the Federal Reserve, under its new chairman Kevin Warsh, held interest rates steady, right in that 3.5% to 3.75% range. No hike, no cut. And on paper, that's the boring, expected outcome. But here's the first twist. It wasn't unanimous. The vote was 9-3. 3 officials broke ranks and wanted to raise rates right now. That's a big deal. A divided Fed is a nervous Fed, and markets noticed. Analysts had a name for it within minutes, a hawkish hold, meaning they didn't hike today, but they left the door wide open to hike soon. And Warsh made the tone crystal clear. He stood up and said, and I'm paraphrasing closely here, there is no soft inflation target. The target is 2%, period. No wiggle room, no going easy. That's a chairman signaling he's willing to stay tight, and maybe get tighter. So the decision itself was a hold, calm on the surface. But underneath, it was anything but calm. Because the real action today wasn't in what the Fed did. It was in how the market responded to it. And that response is where this story gets wild. Because the Dow didn't just dip. It fell over 1,100 points. Its worst day in more than a year. Over $1 trillion, gone, on a day the Fed technically did nothing. So the obvious question, if the Fed held steady, why did everything fall apart? The answer isn't the Fed, it's the bond market. Let me show you. Because what the bond market did today is the real headline, a move we haven't seen in 19 years, and it's screaming something about inflation, about the dollar, and about where money runs next. And where money runs next is the whole ball game for XRP. Stay with me. Okay, this is the part almost no crypto channel will explain properly, so lock in, because once you get this, you'll understand markets better than most people on your feed. Here's what happened. The Fed held rates, but the 30-year Treasury yield, the interest rate on long-term U.S. government debt, surged to about 5.2%, its highest level since 2007, 19 years. Let that sink in. And the 10-year yield jumped too, above 4.6%. Now, why does that matter? Here's the simple version. When investors dump long-term government bonds, yields go up. And why would they dump them? Because they're worried about inflation eating their returns, and they don't fully trust that the Fed is going to crush it. So think about what just happened. Warsh stood up and said, "We're serious about killing inflation." And the bond market basically said back, "Prove it." They called his bluff. They sold bonds, drove yields to a 19-year high, and sent a message louder than any press conference. We don't believe you yet. And here's the second layer, the one that ends an era. Warsh actually welcomed this. He said, in effect, he wants the market to move on real economic data instead of hanging on the Fed's every word. For years, the Fed practically spoon-fed markets. Here's what we'll do next. Don't panic. Warsh is deliberately taking that away. Less hand-holding, less forward guidance. He's handing the steering wheel to the market. One strategist put it perfectly. He's trading forward guidance for market guidance. So what does that actually mean for you? It means the shock absorbers are gone. When the Fed stops cushioning every move, markets swing harder in both directions. More volatility, bigger drops, and bigger rips. Today you saw the drop. But volatility is a two-way street, and that cuts to the heart of why this matters for XRP. Let me pause right here because I need to know something. Did you know the 30-year yield just hit its highest level since 2007 before you clicked this video? Type yes or no in the comments. I read them personally, and I want to see how many of you caught the real story under the headline. Yes or no. Go, then come right back. All right, so the guardrails are off and volatility is back. Here's the question that pays. In a world of bigger swings and a Fed that won't hold your hand, is that good or bad for XRP? The answer is not what the panic crowd thinks. Let me break it down. So let's connect all of this to the coin in your wallet, because here's where the fear crowd gets it exactly backwards. First, the honest part, because that's how we do it here. Higher yields for longer are a headwind for risk assets in the short term. When you can earn over 5% on safe government bonds, some money that might have gambled on crypto parks itself in something boring instead. I'm not going to pretend that pressure isn't real. It is. On any given red day, that's part of why XRP bleeds. But now here's what the panic crowd misses completely. Volatility is not the enemy of crypto. Volatility is crypto's native language. Think about it. Crypto is the most liquid, fastest moving, most reactive market on the planet. It trades 24/7. It moves before stocks even open. So when the Fed removes the guardrails and the whole system starts swinging harder, which market is built to move fast in both directions? Crypto. XRP. We don't freeze in chaos, we come alive in it. And there's a second, deeper layer. What's really driving those bond yields higher? Doubt. Doubt about inflation. Doubt about the dollar. Doubt about whether the government can manage its debt without letting inflation run. And here's the thing. That exact doubt is the original reason this entire asset class was born. When faith in the old system wobbles, people start looking for assets outside of it. A neutral bridge. A network that doesn't answer to any single government's printing press. That story doesn't get weaker when the bond market panics. It gets louder. So put it together. The old system is showing cracks. Yields at 19-year highs. A Fed that admits it can't handhold anymore. A dollar under pressure. And sitting right there is a technology built for exactly this moment. Fast, neutral, borderless value transfer. With XRP already proven on institutional rails, and billions in real assets already tokenized on its ledger. The chaos isn't XRP's problem. The chaos is XRP's pitch. But here's what nobody's telling you about what comes next. Because this whole standoff, the Fed versus the bond market, has one likely resolution down the road. And when it arrives, it could be the exact trigger crypto has been waiting for. Let me show you the setup. So let's talk about where this road leads, because this is the part that should get you leaning forward. Right now, we're in a standoff. The Fed is holding, but under pressure. Markets are already betting on what happens next. After this meeting, the odds of a rate hike in September jumped, sitting somewhere around 57% at last check. So the near-term path might mean more tightening, more pressure, before any relief. I want you to hear that clearly, because I won't sugarcoat it. The next few months could stay bumpy. This is my read, not a promise. But zoom out and look at the bigger machine. There's a war premium baked into oil right now. Middle East tensions have oil elevated, gas prices up, and that's feeding the inflation the Fed is fighting. A lot of this pressure is tied to a conflict that could cool, and history says these cycles don't stay tight forever. The Fed's entire job is to eventually ease once inflation is under control. When that turn comes, when the tightening finally flips toward loosening, That's the historical starting gun for risk assets. And crypto, being the fastest and most liquid, tends to move first and hardest. So think about the setup you're actually looking at. Maximum pressure now. Fear now. Yields at 19-year highs now. Everybody's scared now. And on the other side of that pressure, a Fed that will eventually have to loosen into a market that's been coiled tight for months. I've said it before, and I'll say it again. The assets that get compressed the hardest on the way down are often the ones that snap back the hardest on the way up. That's not hopium. That's just how the risk curve breathes. And here's the calm, powerful way to hold all of this. Today's chaos, the crashing Dow, the screaming bond market, the end of an era, none of that is the end of the story. It's the pressure building part of the story, the part right before the release. The people panicking at the bottom of a move are almost never the ones who win. The ones who understand the machine, who stay calm while everyone else loses their heads. Those are the ones who look back on days like today and smile. So before the final section, here's my challenge. Everyone else watched today and saw chaos. I want you to see the setup underneath it. 60 more seconds, because this last part is the difference between fearing this market and reading it. Let me bring this whole thing home, and let me bring it home strong. Here's where we actually stand. The Fed held, but it was a nervous, divided, hawkish hold. The bond market called the Fed's bluff and drove yields to a 19-year high. The new chairman ripped out the guardrails on purpose, which means more volatility from here. And under all that noise, the cracks showing in the old system are the exact cracks this technology was built to answer. That's not a doom story. Once you understand it, that's a setup story. Now, I know how a day like today feels when you're holding XRP. You see a crashing Dow, screaming headlines, the Fed broke everything, and your stomach drops. I get it. So let me say this as clearly as I can. The fear you're feeling is the most expensive emotion in investing. It's the thing that makes people sell the bottom and buy the top, every single cycle. The antidote isn't blind hope, it's understanding. And you just spent 14 minutes building exactly that, while everyone else was panicking at a headline. Zoom out. Look at what's actually being built while the charts throw tantrums. Banks are moving onto blockchain rails. Institutions are settling real assets on chain. Regulators are writing the rules. The old financial system is straining at 19-year high yields, and a faster, neutral, borderless alternative is being built in real time, with XRP already on the field. The volatility isn't the foundation cracking. The volatility is just the noise on top of a foundation that's being poured deeper every single week. We're early, not despite the chaos, because of it. Early is loud. Early is uncomfortable. Early feels exactly like a day where the Dow drops 1,100 points and everyone screams the sky is falling. If it felt safe and obvious, the opportunity would already be gone. The discomfort is the admission price, and the people who pay it with patience and understanding are the ones who win. The pain doesn't last forever. It never does. Today's chaos is a chapter, not the ending. And the foundation, the real one, under all the noise, is being poured right now, whether the chart shows it today or 6 months from now. So here's what I need from you. If this turned today's fear into something you can actually use, hit that like button, subscribe, and turn on notifications, because I'm tracking every one of these moves so you don't have to face them alone. Drop your yes or no in the comments if you haven't, and tell me straight, after today, are you fearful or are you finally starting to see the setup? I read every single comment. Stay early, stay calm, stay unshakable. Protect your family, do your own research, and never let anyone, including me, rush your decisions or scare you out of your conviction. This has been Crypto with BHW. We're early. The foundation is being poured, and I'll see you in the very next one.